So we are covered into the basic concepts of CMA Intermediate Direct Taxation, paper number 7. In the last video, I will discuss introduction to person, first 10 topics in the basic concept. Now we will further continue in the this video for starts with income 2 of 24 and then heads of income section 14 and gross total income section 80b, gross total income section 80b subsection 5, 80b and subsection 5, rounding of total income and rounding of tax and capital versus revenue and tax planning and tax evasion and tax avoidance, tax planning and tax evasion and tax avoidance, diversion and diversion and application of income, diversion and application of income. So diversion and application of income, diversion of income. So please, my humble request, please study the institute material for your kind understanding. If any, I will some of practical illustrations. So update latest study material available in the institute study website and also from the other social media groups. So let's continue in this video. We will continue with the income of 2 of 24 basic concepts. The income of income 1.1, that is 1.11 income. Income we will cover 1.11. So 1.11 income 2 of 24. 1.1, that is topic number 1. First study note, the basic concept. Topic 11, income from income 2 of 24. 2 of 24. This is the income. So refer to this is not a university's course and graduations. This is professional. So please understand each and concept. That's otherwise you can't succeed in this examinations. So concept is very, very crucial to succeed in this profession. So let's further continue. Income. So income 2 of 24. So income 2 of 24. To consider any receipt as an income, the following points should be kept in mind. The following points should be kept in mind. So now we will continue in the basic concept 1.11 income to section 2 of 24. Section 2 subsection 24 is considered as an income. What are the income will be as per the income tax is concerned. That is the following points we will discuss in deeply. Please listen continuously, you understand. Okay. Cash versus kind. Income may be received. So cash. So to consider any receipt. So any receipt of income. To consider as any income, any receipt as an income. To consider as any receipt of income, the following points should be kept in mind. To consider as an income, the following points should be kept in mind. First point is cash versus kind. First point is cash versus kind. So please refer to the institute material. It say for understanding purpose and follow this video for the, if you better understanding, for better understanding. So let's continue. First point is to consider as any receipt as income, the following points should be kept in mind. So cash versus kind. Income may be received in cash or in kind. Income may be received maybe cash, received cash or in kind, cash or in kind. To consider as an income, the following points should be kept in mind. We will discuss income 2 of 24 in the basic concepts. So first of all, we calculate cash versus kind. Any income may be received in cash or kind. Income received in kind to be valued as per the rules prescribed, and if there is no specific direction regarding the valuation in the act or rules, it may be valued at market price. It may be valued at market price. So whenever you received cash or in kind, so rules may be prescribed as per the act. There is no specific direction regarding the valuation in the act or rules. It may valued at market. So market price, as per the market price is concerned, cash in kind. So cash versus in kind. It may be treated as a income as per the market price is concerned. Market price is concerned. So that is the cash versus kind. I repeat again. Income may be received in cash or kind. It may be valued prescribed. There is no specific direction regarding the valuation in the act or rules. It may be valued at market price. So as per the market price is concerned, that will be treated as a cash, was treated as a income as per the Income Tax Act 1962. So next point is significance of accounting, significance method of accounting. So significance of method of accounting. There is two types of methods of accounting is considered as a income. So method of accounting is irrelevant in case of salaries and house property and capital gains, and method of accounting is irrelevant in case of these at these point these areas. Methods of these areas will method of accounting will not considered as a considered as a income. In case of income, under the heads of salary, house properties, capital gains, these areas will not considered as method considered as a method of accounting is irrelevant. These cases. So what are the cases is, first one we have salaries. So salaries, house property, and capital gains. So capital gains. These significance of accounting is irrelevant to treated as a income. These three cases should be treated as a income. Clear? Next, this is method of accounting irrelevant in these cases to consider as a income. Next, so next point is method of accounting is relevant. So method of accounting is relevant these cases, that is profit and gains, and business profession, and income from other sources, other than dividend. So other than dividend, it will be treated as a income, but method of accounting is relevant these cases. Methods of accounting is relevant in case of salaries, house properties, method of and capital gains. Method of accounting is not relevant, but in this case, profit and gains, income from other sources other than dividend, it will be considered as an income. Method of accounting is relevant. So the other than dividend income shall be taxable. Income will be taxable. So income will be taxable for these areas. So these areas income should be treated as these areas. So shall be taxable, shall be taxable, shall be taxable. So shall be taxable, shall be taxable. So we are discussing so far income section 2 of 24, cash versus kind. Income may be received in cash, but there is no specific direction regarding the valuation of the act rules, and it may be valued at market price. So as per the market price is concerned, cash versus kind is treated as a income for the as per this act, income tax act. So next one is significance of method of accounting, significance and the method of accounting. So method of accounting is irrelevant in these cases. In salaries, house properties, and capital gains, method of accounting is irrelevant in these cases. What are the method of accounting is not importance of these cases. Methods of accounting is irrelevant in these cases. So methods of accounting is not treated as irrelevant. Okay, clear. Salaries, house property and capital gains, these areas method of accounting is irrelevant. Okay, methods of accounting is irrelevant in case of in case of PGBP, profit and gains and business profession and income from other sources, shall be taxable other than dividend other than dividend income shall be taxable in case of methods of accounting is relevant from these cases. So methods of accounting is relevant in case of methods of accounting is relevant in this case of applicable. So that means applicable in case, what is the case? PGBB, profit and gains and business profession and income from other sources other than uh, other than dividend income. So I repeat again, other than dividend income shall be taxable in these cases under the heads of income, profit and gains on business profession and income from other sources. So methods of accounting is relevant, shall be treated as a income, shall be taxable on cash or accrual basis as per the methods of accountancy regularly followed by the assessee. Who is assessee will discuss in the last video. Regularly, who is tax pinch or tax burden to the pay to the government is called assessee. I repeat again, assessee, a person by whom any other sum of money, a penalty paid under this act, irrespective of fact whether the proceedings are taken by against him. So SSC is a theory questions. We study the theory questions. So first one, cash versus kind. Cash versus kind, income received or received in cash or kind, it will be treated as there is no specific direction regarding the as per the market price is concerned. It be treated as a income cash versus kind in case of cash versus kind. Significance of methods of accounting. So methods of accounting irrelevant in these cases. So first one is salaries, income from house property, capital gains. So methods of accounting is relevant in case of PGBP and profit and gains. PGBP and profit and gains. PGBP, profit and gains and business profession, that is simply abbreviation PGBP. Other than dividend shall be taxable in case of cash or on taxable on cash or accrual basis. So accrual basis methods of accountancy is regularly followed by the assessee. So that is the 2 points we will remember. Next we to consider as income. So next, notional income. A person cannot make a profit out of transaction with himself. I repeat again, a person cannot make a profit out of transaction. Cannot make a profit out of out of transaction with himself. Hence, the goods transferred from the one department to another department at profit. So, notional income. So, notional income will be treated as a notional income. Notional income. Now we'll discuss in the income of 2 of 24. A person cannot make a profit out of transaction with himself. Hence, goods transfer one department to another department at a profit shall not be treated as a income of the business. Shall not be treated as a income of the business. Shall be treated as a income. So a person cannot make out of the profit himself. Hence, it shall not be treated as a income. So shall not treat it as an income of the business. Shall be treated as an income. So a person cannot be take over the. So national income is a tag is considered as a income. National in case of income, but make a profit out of the in transaction with himself. Hence, goods transfer from one department to another department at a profit shall not be treated as an income of the business. Sources of income. Income may be temporary source or from permanent source. It will be treated as a income as per the Income Tax Act. So next point we discuss sources of income. Sources of income. Sources of income. Either sources of income is temporary source or permanent source. It should be treated as a income. So next, capital versus revenue received. Capital versus revenue received. A capital receipt is not liable to tax. Capital receipt is not liable to tax. Not capital receipt is not liable to tax. Capital receipt is not liable liable to tax. So capital receipt is not liable to tax unless unless specifically provided in the act. Unless capital receipt is not liable to tax unless 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 specifically provided in the act provided in the act. Unless capital received is not liable to tax unless specifically provided in the act, whereas a revenue received is not exempted unless provided in the act. Further following, so we will discuss later completely, elaborately for the next topic. So capital receipt versus revenue receipt. Capital receipt is not liable to tax unless specifically provided in the act, whereas revenue receipt is not exempted. Revenue receipt is not exempt unless provided in the act. So these are the considered as a income. So next, loss. Next point we will keep. Next point is loss. Loss. Income also loss. So income also includes negative income. It will be treated as a income. So negative income is also considered as income. And dispute income. So dispute means conflict. So conflict income, dispute income in case of dispute regarding the title of income, assessment of income cannot be withheld, and such income normally taxable in the hands of recipient. Normally receipt of, so in normally receipt. So now we will continue. Mere reimbursement of expense is not income. Mere reimbursement, next lump sum receipt and legality and double taxation and income from mutual activity. So this, so last income dispute income in case of dispute regarding title of income, assessment of income cannot be withheld. Cannot be withheld. Such income such income is taxed in the hands of recipient. So taxable in the hands of recipient. The hands of recipient. In the hands of recipient shall be treated as a recipient. Double taxation. Same income cannot be taxed twice. Same income cannot be taxed as double taxation. Cannot be Same income cannot be taxed twice. Same income cannot be taxed twice. Legality. The Act does not make any difference between legal or illegal income. The Act does not make any difference between legal or illegal income to consider as an income. Reimbursement. Mere means important. Reimbursement expenses is not an income. Mere reimbursement of expenses is not an income. So remember, income is not an income. So lump sum, there is no difference between the income received in lump sum or installment. There is no difference between income received in lump sum or installment. Lump sum or installment. So dispute income must be regarding title of income. So dispute income is or conflict income. So title of income, assessment of income, and cannot be withheld of such income. Normally taxable in the hands of normally taxable in the hands of recipient. So who have pay the tax, it will be treated as a, in case of dispute or not, it will be treated as a taxable income as a taxable in the hands of recipient who have pay the receipt who have pay the receipt who have pay the tax. So income from mutual activity. In this regard, it is to be noted that in case of mutual activities where some people contributed to the common fund and entail some income by mutual activity. So for example, we discuss also here exemptions. In this regard, it is to be noted that in the case of uh, mutual activity where some people contribute to the common fund are entitled to participate in the fund, and surplus arise which is distributed among the contributors of the funds. Such surplus cannot be termed as a income. So cannot be termed as a income. So in this regard, I repeat again. So income from mutual activity. So income mutual mutual activity. So mutual activity. In this regard, it is to be noted that in case of mutual activities where some people contributed to common fund are entitled to participate in the fund, and the surplus arise which is distributed among the contribution to the fund, which is surplus which is distributed among the common contribution to the contributors of the fund. Such surplus cannot be treated as a income. Such the contributors of the fund. Such surplus cannot be termed as a income. So exemption, income from trade derived. So these are the exempt income derived by trade, income derived by trade, professional or other or similar association specific services to its members shall be taxable under section 280, section 28 3. So in section 28 subsection 3 we will discuss later this section 28 3. So next, profit and gains of any insurance business carried or mutual insurance company or by corporate society will be treated as a income. Exemptions in case of income by mutual activity. Profit and gains of including providing credit facilities are carried by corporate society with its members, it will be exemptions. So pin money is received by wife for personal expenses or small savings made by a woman from money received from husband for for meeting the household expenses. shall Such receipt is not treated as a income. So income on a investment out of pin shall be treated as a income. So award received by person related to his business or profession shall be treated as income incidental to such business or profession. However, award received by non-professional person is in nature of gift or personal testimonial and the taxable thereof subject to the provisions of the act. Embellishment, money embellishment gain embellished from therefore fails within the wider definition of income. Contingenium or anticipated income is not treated as a income and also not taxable. Subsidy, assistance in the form of subsidy urgent subsidy. Last but not least in the point, subsidy subsidy So subsidy assistance in the form of subsidy or grant or in cash receive incentives or duty drawback or waiver of the concession or reimbursement by whatever name called by the central government or state government. So subsidy will be not category will not be. So detailed explanation we will discuss section 10 43 explanation 10 to section 43 or subsection 1 is not taxable separately. Subsidy grant or reimbursement which is taken into the account of determination of the actual cost of asset or as per the explanation 10 of section 10 to section 1343 for 1 is not taxable and separately. The subsidy or grant by central government for the purpose of corpus or trust or insured shall not be treated as so. As per the subsidy is not taxable as per the income tax. So that's all this income of 2 of 24 to consider as income. So students once read at least 1 or 2 times for your understanding. If any doubts, comment below. So next continue the 1.12 that is now we went to the section 14. So heads of income. Now we will discuss heads of income. Heads of income. Now we will discuss 1.12 section 14. According to the income tax section 14, according to the income tax section 14, according to the income according to the section 14 of the act, all income on person shall be classified under the following 5 heads, all according to this section. So now we will discuss heads of income. Heads of income. So heads of income. So heads of income. Heads of income. This section is 14 given by the Income Tax Act 1961. So heads of income section 14. Heads of income section 14. Heads of income section 14. So like this we remember, keep remember. So heads of income section 14, clear. So all the income heads of income, all the income of a person shall be classified under the following heads, under the following five heads. So five under the all all persons. What are the person? That is we have discussing in the person 2 of 31, either individual, HUF, association of persons, body of individuals, body of individuals, local authority, association of persons, and artificial judicial persons. And these seven persons, term persons given by the under section 2 of the 31, all of shall be treated as a persons according to the 2 of 31 of the Income Tax Act 1961. So from the following five heads we calculate heads of income. First one is salaries. So salaries. So first one is salaries. Heads of income section 14 in the Income Tax Act. There are five heads. What is this? First one salaries, second one house property, third one PGBP, profit and gains and business profession. Next we study profit and gains. Fourth one is capital gains. Capital gains. These are the five heads of income given by the Income Tax Act 1961 according to the section 14 of that act. So capital gains. Last fifth one, income from other sources. Income from other sources. So income from other sources. Income from other sources. These are the five heads. Five heads will be classified as a heads of income according to the Income Tax Act in the form of, in the name of section 14. The name of section 14. So section 14 is a heads of income. These are what are the sections? 14 mention all persons shall be classified under the section all under the following five heads. That is income from salary, house property, and PGVP, capital gains, income from other sources. These are the five heads we will classified as a heads of income. Heads of income is five: salaries, income from house property, profit and gains, a business profession, and capital gains, income from other sources. For computation of income, all the taxable income should be fall under any five heads of income. I repeat again, from the computation. So with the computation means the taxable, for the computation of income, all taxable shall be, so all taxable income shall fall under the any Income Tax Act under any five heads as mentioned above. So I have already mentioned about the five heads. For the computation of income, all taxable income should be fall under any five heads of income. If any type of income does not become part of one of any above mentioned or the first four head, it should be part of the fifth head. So if any income above four heads, that means salary, house property, PGBP, and capital gains, any other income, any part of it does not become any part of the income, any part of any one of the four heads, any one of the four heads, any one of the four heads, it should be part of the fifth year. That's why we called as a income from other sources. I in I let me reason. Suppose we have suppose one salary is the in heads of salary, house property, profit and gains in business profession, and other other source if and capital gains. These any miss out of any income, any miss out of these four heads will any miss out of these four heads, it will be treated as a will be transferred to the simply we say. That's why here any does not become any part of the income above mentioned in four head, it will be treated as a income from other sources. So this may be residual head. So income from other sources is termed as a residual. Residual means residual head. Residual head. So residual means remaining any balanced income will be treated as a income from other sources. That's why we call it as residual head. That means remaining head. Income from other sources apart from the four any type of income does not become a part, so that will be treated as a income from other sources for the computation purpose. So remember this line is very well for the computation of income from others, any treated as a other income, any part does not belongs to the above four heads, it will be treated as a income from other sources. So significance of heads of why heads of income is very significant, very important. It's very important for computation of taxable, for the computation of taxable. So income is chargeable under particular head, cannot be charged under any other head. Income chargeable. So income chargeable under particular head cannot be charged under any other head. Particular charge at any other head. So next, the Act has self-contained provisions in respect of each of heads of income. If any income is charged under wrong head of the income, the assessee may lose the benefits of deductions available to him under the correct heads. So I repeat that. What are the significance of heads of income? Computation is income. So income chargeable under the particular heads. So now we will discuss in this section 14 significance. Significance means importance of heads of income. Heads of income. Heads of income. Significance heads of income. Income chargeable under the heads of particular head cannot be charged under any other head. The Act has self-contract. So for the deduction purpose, if any income charged under the wrong head of the income, the assessee may lose the benefit of deduction available to him the correct him income under the correct head. So this is the significance. Significance income is chargeable under particular cannot be charged under any other head. So for that way each heads of income they have unique structure. So unique way of income also. That's why we computate each have separate sections. That is one of the significance of we computate the heads of income. So next point, the Act has self-contained provisions for in respect to of heads of income. The Act contains self-contained. They have unique provisions to maintain the particular heads of income. In case of any wrong heads of income, we doing chargeability. So the assessee may lose the benefit of deduction. So for the benefit of deductions of the assessee, it may be useful to the it will be lost to the assessee for the benefit of the deductions may will lose by the assessee. That's why income is charged under the particular head. That is one of the significant of income. Next, heads of income and source of income. What is the distinguish between? That is difference between. Distinguish between. distinguish between heads of income next we discuss heads of income versus source of source of income. Heads of income and source of income. There are only 5 heads of the income we are mentioned below in the section 14, but assessee may generate income from various sources. So according to the section 14 of the income tax 1961, apart from 5 heads of income, so assessee may generate the income from various sources. Who knows? That's why the income tax have a difference between heads of income and source of income. In the same head of the income, there are various sources of income. Example, income from under the head of income from house property, there may be 2 or more house properties, and each property shall be treated as a source of income. The source of income, the sources of income is decided under which head among the 5 heads income shall be taxable. So that is the difference between heads of income and source of income. So apart from 5 heads, the assessee may be generate multiple source of income. So that's why the income tax, that is the income tax act, provides the heads of income and other sources of income. For example, in case of house property, the assessee have multiple houses, so each house property is generated from income from other sources. Income from one house property is living, and other sources of house property income. So the source of income is decided under which head. So among the 5 heads, the income shall be taxable. The income shall be taxable. That's all the heads of income. So I hope you understand. So in this video I will cover income section 2 of 24 and in heads of income section 14. Clear? And also distinguish between heads of income, sources of income. So next we will cover. So next video I will cover gross total income section B 80B of 5, and then we continue with the rounding of income. So next we will cover gross total income and rounding of total income, rounding of rounding of total income and rounding of tax. So and then I will stop this video. For the next video we will discuss capital versus revenue receipt, because it will be length due to the video length is concerned. So otherwise we call bored. So daily 1 hour to practice direct tax, you will understood. So I will make a videos for next. So we'll next continue the gross total income. So gross total income. So gross total income. Gross total income. Gross total income. So we are covering so far introduction to heads of income section 14. So in this video I will cover income section 2 of 24 and heads of income. So heads of income. So now we will discuss 1.13, that is 1.113, gross total income. Gross total income, simply we say GTI, gross total income. So gross total income. Section 80B we will discuss under section 5, under subsection 5, 80B under subsection 5, gross total income. Gross total income we will discuss. So what is the gross total income? Let's discuss gross total income. So let's discuss 1.3 gross total income. So gross total income. Gross total income. Gross total. So gross total income under section cover in the Income Tax Act 80B subsection 5. Subsection 5. So gross total income is the aggregate of income under all five heads. So we already discussed under what are the five heads: salaries, income from house property, profit and gains, and business profession, capital gains, and income from other sources. So we are that is the heads of income. So aggregate. So aggregate means overall we cover. After that, we have something will come that will be treated as a gross total income. After aggregate, all the incomes will be treated as a gross total income. The gross total income after adjusting set off and carried forward losses, the deductions under chapter 6A, deductions under chapter 6A, because assessee get benefits from the income tax. We discuss in the chapter 6A to arrive the total income or taxable income. Arrival income or total income. So whenever total income is calculated, that total income amount will be taxable under the heads of under the Income Tax Act. Total income is the taxable amount when the assessee will be paid. Assessee will be paid. So what are the five heads we will discuss? We already discussed, that is the means salary, so computation of, you have see the pro forma, I will briefly draw. So computation of total income for the assessment year. So we have see amount, correction details, amount. We see, sorry for this, excuse for this. So gross total income is aggregate income from all five heads. So gross total income: salary, house property, PGBP, and capital gains, and income from others. So these all five heads. The aggregate amount is considered as a gross total income. So from that gross total income we will deduct deductions under chapter 6A. We will discuss further, not relevant here. Less deductions under 80C to 82. This is the section deductions we will discuss later on that topic. So and then we subtracted total income, including set off and carried forward losses. So the gross total income is the aggregate income for under all the five heads after adjusting the what? Set off carried forward losses less deductions under chapter 6 provided from gross total income, adjusted from Set of carried forward losses. Deductions under Chapter 6A is provided from gross total income to arrive the total income or taxable income. So computation of total income for the assessment year 2022. So please this the table in your institute material. First one is salary amount income from 5 heads. We type in 5 heads under remaining less set of carried forward losses. And then we have gross total income less deductions under 80 section under section 80C to 2. So total 86 to 80C to 80U we have deduct under the 80C to 80U, that is we have remaining unless total income we have total income we have total income finally. This total income will be taxable income. Total income is a taxable income. Remember it, total income is a taxable income, not gross total income. So gross total income is a aggregate income of all the heads. So total income is a taxable income. Total income is a taxable income, not gross total. Gross total income is not an income. Okay, we have not deducted any sum because when assessee will be benefited, some the assessees will be benefit. For that purpose, income tax has provided the deductions under section 80C to 80C in the chapter number 6A. Okay, clear? That's all the gross total income under section 80B. Gross total income section 80B. This is the multiple choice question for match the following. So remember basic concepts, heads of basic concepts, section numbers very important for the MCQ's purpose. So please revise, at least write down what are the content we have given for the MCQ's purpose. Gross total income is very important for the MCQs for multiple choice questions. So next move into the 1.14 topic, that is rounding of income to 84. Rounding of income. Next 1.4 rounding of total income. So this rounding of total income also. So apart from deductions, in the last couple of seconds I mentioned the gross total income after deducting the sections, and also the income tax has act provides by the benefit of assessee. Rounding of total income is section 288A. Under section 288A provides total income when after deducting the gross total income from less deductions to 80C to 82, and there some part of portion, some multiple nearest to the multiple for the counting of multiple to 10. So suppose multiple we have C after deducting the total income. So total income, rounding of total income. So total income, I already mentioned total income will be taxable income. Total income is a taxable income, not gross total income. So gross total income. So gross total income of the assessee. So next 2 of 3. So whenever rupee is element, total income, rounding of total income is, suppose we have, if I figure out, suppose we have 4.5, that is, suppose we have example we have taken here 465.4. So what, this is the total income. For example, total income we taken, so we will consider it as a 60.45, sorry, so okay. So total income is so computed, we'll have to round it off nearest multiple 10. If the last figure is rupees element is 5 or more, it should be rounding off to next higher amount, which is multiple by 10. So which is multiple by 10. So I repeat again, If the total income is computed, so computed, we'll have rounding off to the nearest multiple 10. So if the last figure is 5, if the last figure is 5, so suppose we example here 42,645. This is the total income works out after deducting the both as gross total income and deductions. 4.25, the 6 point. So it so last figure last figure is 5. So last figure is 5. It will be multiplied by 10. So multiplied by 10, what it should be? 5. So multiplied by 10, 5 into that is 50, that is 42 point, so 42,650. So more than 5 we calculated 0 for 50, 45 and then 50. So in other case, we have below 5 element of pi. So the paisa of element should be ignored. So above 5 we have calculated into multiplied by next higher amount. So next higher amount is 10. So we need to figure exactly, not paisas. That's why the rounding of total income is 288 a, 288 a. Rounding of total income 288 a is concerned. Okay. 40. Suppose for another example here, 4164 below 5, 4.498. Simple. I taken the example in the institute material. We have taken into the other numbers also, but understand same method is will be considered. So above high. So last 41 last figure is last number of figure is 5 or more. It will be treated as a nearest multiple 0. And then below 4.9, that is for example 42.664 or 41.4, that is 5.1, that is 551.644.98 will be treated as a 0. 640. So 640 less 5 and less 5. Clear? That means 52,640 will be treated as a rounding of total income. So multiple by so below 5 will be treated, below 5 will be reduction to the 5 and above to the multiple by 10. Simple. Point last digit is 4 before point and then we close it to the, this is the income tax, rounding of tax. So rounding of total income we will calculate like this. So rounding of tax section 288b, rounding of tax 288b. So rounding of tax. Now we calculate rounding of tax. The tax calculate on total income should be rounding of nearest 10. Amount taxable to the amount tax including TDS or advance tax, interest, penalties or refund shall be rounding of nearest to 10. Nearest to 10. Rounding of tax should be treated as a either TDS, advance tax and interest, penalties etc. will be discussed in the each have the different topic, will not be relevant here. So provisions should be reluctant. Tax liability actual workout. So for example, for 5,876.49. So we'll treat considered as a 80 because last digit is over 5. So over 5 means that we treated as a 0. So all will be multiplied with the nearest 0. For example, here comes will to below 5. So below 5, that is 6,452.50. We just continue here 6,450 because less than 5. So less than 5 will be deducted to the 0. So same again 8,388. So what is the concern? So 38 we will treat it as a over than 5. Over than, so 8 is over 5 is 5 over than 8. We treat it as a 8,740. Same like 2 below 5. So 130. So this is the rounding of tax and rounding of total income. So rounding of total income is 288 A 288 for is rounding of total income. This is 288B is rounding of tax.